Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really pretty interesting times in the US yet again. The latest inflation data coming out, which was the Fed's sort of preferred inflation gauge, the PCE, that came in on core year on year at slightly firmer than expected at 2.7 versus 2.6. Now, while Trump claims that there's zero inflation in the US, that's clearly not the case. And then to just heighten the sort of feud between sort of Trump and Powell, Powell has come out and sort of stated that if it wasn't for tariffs, the Fed probably would have cut interest rates. Been Trump's sort of gripe all along. He said, the Fed should be cutting interest rates by 1%, if not 2%, to reduce the cost of the borrowing. And the reason why he wants to reduce that cost of borrowing is because his big beautiful bill that has just passed in the Senate by a deciding vote from Vice President J.D. Vance, that's going to increase the deficit by approximately 3 to 4 trillion over the next sort of 10 years. What's really quite interesting is where that Trump has sort of bullied his way into getting this sort of passed. Really coming down hard on many Republicans in the Senate who were looking to oppose the bill. But of course, over the next sort of 10 years, these sort of senators could be there for that sort of length of time. Trump will be out of there in sort of just over 3 and a bit years. Most experts and analysts, are of firm opinion that it will increase the deficit, and indeed some of the hardline sort of Republicans within the Senate who are sort of fiscally responsible are saying that this will increase the deficit, and the Republicans have to own it. Now that obviously goes against sort of Trump's mantra and his sort of agenda. This was his keystone policy. But what it does do as well, it goes against many of the sort of election promises in terms of cutting Medicaid, which he said he wouldn't do. So potentially, is that going to see his opinion polls and ratings sort of fall further? They're already at sort of near record lows. But also as well, we're getting very close to that July the 8th sort of deadline for the pause on the tariffs. And what's starting to happen now is that prices are starting to increase in sort of ticket prices on the shelves out there as a result of tariffs. Which is what everyone was saying, apart from those in the administration, that the people who are paying the tariffs are the US consumer. So this is going to be very interesting to see how it sort of plays out in the next sort of week or so. Obviously, you've got the big July the 4th holiday at the end of this week. And Trump wants to get that big, beautiful bill passed before then. Now, as we've seen the ceasefire between Iran and Israel sort of hold, interest rates have come back in the US. 10 years 426. The 2 years taking quite a fall now at 378. And that 30 years backed off from 5% at 480. But it's just going to be interesting to see how these sort of trade over the next sort of 3 to 6 months as that deficit looks like it's going to increase, and that's going to require more funding. Meanwhile, you've still got bombings in Gaza from the Israeli forces. And you've also got Putin as well, bombing Ukraine pretty much at will. And what's sort of quite interesting is, really the lack of condemnation coming out of Trump in regard to sort of Russia and Israel. Now, oil's obviously backed off dramatically, currently around sort of 65.10 and change. A little bit of good news in the UK. The latest PMIs are slightly up, indicating the economy is recovering a little bit. And obviously, as we get into sort of a big summer of sport, you've got Wimbledon currently. Obviously, you've got sort of the cricket tests, etc. They'll be hoping that will see plenty of spending taking place in the UK economy. Now, in the EU region, obviously, the big news out of NATO was the increase in defence spending. Also, you saw the Swiss National Bank as well cut interest rates back to zero. But as always, just waiting to see what will happen with these sort of tariffs. And, Trump's really pretty unpredictable on those. Now, in Australia, good news on the inflation front. The latest CPI data, that fell to 2.1 from 2.4 expected. So potentially will we see another rate cut from the RBA at the next meeting? Also as well, the Australian economy will expect a reasonable boost from the British and Irish Lions that are touring out there for the rugby. Now here in New Zealand, it's still sort of slowly, the economy appears to be sort of recovering. There's plenty of sort of green shoots out there. But it's just going to take some time. But against that, you've still got some pretty strong food inflation out there. But as interest rates have fallen, and obviously mortgage rates have fallen, with those mortgages set to be reset over the next sort of 3 to 6 months, that will see more disposable income coming into the economy. And certainly the rate cutting cycle isn't over yet. Now, while that food inflation may just prevent the Reserve Bank from cutting interest rates at its next meeting, you fully expect interest rates to still come down over the next sort of 3 to 6 months, which will take the OCR down to 3%. Some even believe it could go down to 2.75, maybe even 2.5. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.